Are investors deciding that now is the time to get back in the Chinese market, that the restrictions may not be as negative as we once thought they were, or is this more buying the dip?
I think in the short term, the regulatory risks in China's tech market still exist. The regulatory clampdown that started about a year ago came completely out of the blue, but it was done for the right reasons. Chinese tech companies essentially have been told now that they have to follow the Chinese government's policy, which is to ensure social cohesion, to ensure equality of income, and things that keep the Communist Party in power. In the long term, however, I think if you believe that China is going to be the global superpower by, say, 2040, and if you are purely motivated by the profit motive, then I think you have no option but to get into the Chinese tech market now because it's relatively cheap compared to what it was a year back.
So let's talk about, we have some big earnings coming up later today. We just mentioned them, Alibaba, JD.com, huge Chinese tech companies. What are you expecting in not only their performance, but also their guidance and commentary about these restrictions?
I think Alibaba and JD.com shows two sides of China's tech sector. So JD.com essentially followed the rules. They, for example, paid their workers well. They paid national security issues before the tech regulation came down hard on them. Alibaba was purely driven by the profit motive, and therefore Alibaba's share price got punished a lot more than, say, JD.com. In the future, I think both companies are well positioned. Because remember, China's just had a tech crackdown in the last year, but is the risk of regulatory crackdown in the West any less? And I would suggest it's not. I would suggest the same issues are driving political pressures in the US and in Europe, issues like income inequality, data privacy, these kind of issues, antitrust issues, anti-competitive issues. And there could be a regulatory crackdown in the West. What China has shown is that you can crack down on the tech sector. Remember, people have been talking about this for years, for decades, that tech is out of control, but regulators have not acted. What China has shown is that you can regulate.
Yeah, China certainly has regulated. Now, I see your point about a similar environment as far as people talking about cracking down on tech, both in China and the U.S., but certainly the Chinese government has taken a lot more action. They've been especially vocal in taking actions when it comes to video games and online education. Those have really seemed to bear the brunt of some of these restrictions. In fact, the president of Tencent calling these crackdowns, these restrictions, whichever way you want to call them, the new normal. So if this is definitely the new normal, are there other sectors in Chinese tech that have some protection from these crackdowns that may be a safer investment?
I think the answer is we just don't know. If I was forced to make a decision, then I would say the two sectors within Chinese tech that are ripe for growth at the moment, given these uncertainties in regulation, are electric vehicles, with everything that's going on with COP26 and so on, and also the Chinese semiconductor sector, which is one of the weakest, which is really the weakest link in China's tech armor, and therefore it's where a lot of investment, I think, is going to go in.
So, Cyrus, one last question before we let you go. T. Rowe Price in his annual Global Outlook says the near-term volatility from regulatory crackdowns in China creates an attractive investment opportunity heading into next year. They're citing strong GDP growth at 5%, solid exports. Do you share that opinion that right now these Chinese stocks are attractive? And for how long of a horizon do you see that being attractive if you share that opinion?
I think in the short term, let's say over the next year, they're extremely risky, but a lot of that risk also applies to tech in the West at these valuations. On a longer term, say on a 10-year view, I think now is a great time to invest in China's tech on the assumption that you believe that China will be the global superpower by 2040 or 2050, and also on the assumption that you are disregarding ESG issues. So remember, the big theme in the West is environmental, social governance. Investors like BlackRock have said they're going to penalize companies for not complying with their ESG policies. And Chinese tech companies are not known for being the best at ESG. So that's my disclaimer. But overall, I think Chinese tech is cheap.